Hello and welcome everyone to Gold Asset of the Day for the 1st of February 2023, presented by myself, Phil Carr, at the Gold and Silver Club. So with that, this week we have a blockbuster week with back-to-back central bank news items. So firstly, on Wednesday, we have the FOMC statement. Then on Thursday, we have the European Central Bank. And then also we have the Bank of England. And on Friday, non-farm payroll. And on Wednesday, we have an OPEC meeting as well. So this is going to provide you many opportunities to take advantage of the massive volatility that we typically get off the back of these central bank news items, where we are awaiting updates on their interest rate decisions. And with that, we've already started to see a lot of profit taking right at the end of the month here. So many commodities, they started to pull back and roll over. We, of course, saw gold prices over the month of January. They broke out to 9-month highs, back towards 1,940 US dollars per ounce. So into the very last trading day of the month, we've seen the usual profit taking, usual outflows, taking the price back down towards 1,900, spot on, in fact, for gold, before then getting a slingshot breakout back towards 1928. Similar on platinum, usual end of month profit taking, which actually further accelerated last week from China when they're on their 1 week public holiday. We've seen platinum prices from high to low break down over 1,100 points, all the way down to 1,000 US dollars per ounce just on Tuesday, yet again offering you massive opportunities to buy in at much lower prices to take advantage of fresh capital that comes into the market once you move into the month of February. And of course, with back-to-back news items that we have over the course of this week. It's been similar as well on energy. So with crude oil prices, we've seen, of course, massive breakouts over the course of January, locking in 4,000 points profit with our clients on crude oil across multiple positions. And then what we've seen right at the end of the month is the usual profit taking that you get across the energy complex as you move towards the end of the month. And of course, last week, China off on their 1 week public holiday. You want to utilize the cycles to your advantage, coming out at the top of the ranges and then yet again reloading back at the lower end of the cycles here to benefit from the capital inflows that you get as you move into the month of February. We telegraphed all of that to you last week to expect the normal capital outflows that you see, and thinner liquidity during China on their 1 week public holidays offered you much better prices to get into energies, to get into the precious metals, especially right at the end of the month. But you can see now, as you got into the close on Tuesday, many of those metals and energies, they're now starting to get a bid to the upside. You've got oil closing up over 1% on Tuesday. You're seeing platinum get a bid, palladium get a bid, gold, silver, which has again been a blockbuster month for many commodities. And then as you move into a new month, locking in those profits and then reloading yet again at much lower prices. So we've got on Tuesday, gold prices, silver prices, palladium prices, platinum prices, copper prices, oil prices, all trading back towards their daily highs as you've seen fresh buyers come into the market on the very last trading day of the month, after we've seen those end of month outflows presenting much better opportunities for you to sniper in. And again, this comes back down to learning and utilizing the real-time data-driven cycles for each commodity, learning the daily, the weekly, the monthly, quarterly cycles, which will benefit you massively. Obviously, understanding and learning the capital flows in the market. Today, obviously, moving into the 1st of February, this is going to provide you further opportunities to observe that usual new capital that comes into the market at the beginning of a new month. Alongside that, further compound this with the narratives in the market, the central bank interest rate decisions that we're going to see over the course of this week, where we have the Fed on Wednesday, European Central Bank on Thursday, Bank of England on Thursday, Friday's non-farm payroll, and the OPEC meeting on Wednesday, understanding where the key areas of liquidity they reside in the market, so you can build out those positions, sniper in, and of course further compound that with the understanding of the key areas of liquidity that are targeted in the market by the banks, hedge funds and money managers, so that you can make sure that you're getting in at the right levels and also banking profits at the right point in the cycles, entering in at the right point of the cycle and also locking in those profits at the right point of the cycle as well. Further, of course, compound that with the intermarket correlations, the ratios in the market, utilize data, statistics, market intelligence. That is going to help you massively alongside your understanding of how the hedge funds, money managers, banks, institutions and commercials are positioned in the market in real time. That is going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.